Warriors. How's everyone doing today? Hi, Mark, Ren, Kevin, Shepard, Shahab. Everyone doing all right? Hi, Brock. All you Mavericks. Attempting one of the toughest things to learn on the planet that tests you is psychologically, emotionally, physically, in all ways. A veteran pulled me aside when I was a rookie broker and said, "Kid, this is a tough way to make an easy buck." He was right. Okay, so let's talk about a few tough ways to make an easy buck in here. You know, been talking about gold having the potential to get to this 3 drive line, this blue line here. Everyone see it? Give me a Y if you see it. Hi, Monica. This line right here. Okay, I know this is a little bit in the way, but you see drive 1, drive 2, drive 3. We're not there yet. So it comes in around 1790 or so. I just want to talk about the 1800 number, and just something I've noticed over the years is that, thank you, Jess. I think actually WTI worked better. I actually took heat on NASDAQ and got picked off near the high, but thanks. Crude didn't give, was almost immediate gratification. So when everyone's looking for one number, and who agrees with me that they're hearing gold's going to 1800, and for how long? For a long time, right? And there are technical measurements that give you that, and wave counts that give you that. But when the whole planet is looking for one number, something to keep in mind, that I've seen times where it either doesn't achieve it, and if it gets there, it blows through it. Okay, so one of the two is going to happen. I don't think it's just going to stop at that number. I mean, maybe we stop at 1787. Anyway, this is the first time in a while that I've seen gold up $10 and silver down a penny on the day. All right, so I know a lot of people are bullish silver, but I think that we're getting, talked about this last week, the gold silver ratio, that we could be getting, a pretty important turn here after this big rally in silver on the gold silver ratio. We're starting to turn here. This makes silver, if I'm right, and we're going at least back to 104, what if we break out? If you are a bear on the economy, silver is more of an industrial. Okay. Thanks for sharing that. Silver would be more affected by a recession than gold. So what I'm going to do is I'm going to wait and see where I think gold is topping, and my preferred short is going to be silver. So say gold gets up to 1800 or so, it's very possible, that silver doesn't make a new high. Maybe it challenges this high. But the gold silver ratio, if I'm right and it's turning up, my preferred short is silver, not gold, right? Because gold's gonna, as that goes up, gold's outperforming, doesn't go down as much on down days as silver, and on up days it outperforms on the upside. Anyway, that's my view on metals. And just one other thing that will build the case, and we're not there yet. Look at Newmont. Newmont led the way during this bull move here, and then we had the recent correction in gold that lasted a while. Look at Newmont. Gold's at new highs. When Newmont was here, I think gold, the high was 1767 in gold. So we're now trading $10 above it. And look at Newmont. It hasn't even rallied halfway back with gold at new highs. That to me is not a good sign either. GDX is a little stronger. It's already retraced 78.6, so well, not quite 78.6. So, you know, if gold's near 1800 and GDX is not at a new high, I wouldn't call that a bullish signal. Okay, just like it led on the way up, it could be portending, like Greg said last week. I said, you know, when we get there, oh, good for you, Alexander. Yeah, nice trade. And Greg said, yeah, at least an ABC type correction after we complete. So what I call, it's amazing, you know, what I call a 3 drive, Ellioticians are calling an ND diagonal up at that line. So what else to talk about? Crude, if you saw the chart of the day, that too was bearish crude, and you know they had I think Blake did it there, and Steve at the end of the session yesterday, who took the turnaround Tuesday call on short crude besides Alexander. Alexander had his pom-poms out while it was sliding yesterday. Anyone take advantage of that? Sansi? Okay. Congratulations. Okay. Are you a subscriber? You're part of our family, Sansi? Just curious. Not yet. Well, okay. Now, how about after, you know, peel a little something off of a winning trade and open yourself up to even a higher volume of actionable ideas by the whole team? Get a hold of Joe. Maybe he'll cut you a deal. Anyway, pull some of your profits and enjoy them. So crude looks negative to me. I mean, we're not going to have a reversal week. It's got a lot of work to do. It comes in at 36.30. But I saw Steve's charts, and Steve has this $28, $30 level. Why can't we do this over the course of the next several weeks? Oh, nice. Okay. So I think that's about all I really wanted to talk about. You know, I still think the market's vulnerable, even though NASDAQ could charge again. Look how many successive new highs we've had in NASDAQ, and I'm just going to wrap it with this on the S&Ps. Okay, so we know we had this, right? So this is one lower high if you compare it to this, right? But let's break it down. So look at the successive. I know it's not much, but you know, lower high, stop hunt. It just took out this stops. We couldn't even take out last week's high. So yeah, if we get those 3160, there's something else happening. But I don't know, compared to the NASDAQ, it's acting pretty heavy. So if the S&Ps can't get going with what tech is doing and everything else, what's going to happen if we get a correction in NASDAQ? And even though we blew to new highs, we're kind of right back to the old high, 101.55. That'll be 10,150. We start trading back under this high is your first indication. Maybe it's rolling over. And look at where the VIX held. Right here. So VIX still looks okay. Almost looks like a 1, 2, 3. I think you could expect some volatility in the coming days and weeks. So those are my calls. The next one's yours. 800-899 crude bear. All right. Bail me out of here, Blake. It's a new face record for me. I talked for 10 minutes.
Are you going to be okay? You going to make it?
A good one.
I'm just wondering, asking for a friend. Well, you talked about everything that I really wanted to talk about today. So I'm done. I'm going to pass it over to Steve. No, but seriously, you
I'm
have
covered
talked
as
about,
well, so let's just,
what?
we're going to call it a day.
End the session.
Yeah.
No, but Dan Popescu is going to be here later, and you like Dan. He's a kind of a sound money historian. So
Okay, we're gonna reopen the webinar when he's here. Okay.
Right. So, but you talked about crude and you talked about gold, and those are like two things that I actually want to talk about today.
Go ahead, man.
But like let's take a really good look at crude real quick. This is my chart of the day yesterday. So if you if you guys read the blog, it was the chart of the day. Now let me show you the reason why. If you take the this high here to this low right here, okay, we hit the 161% extension, right? Then, we were slightly above the 50% retracement of this move. And so you got this nice little confluence. More importantly, if you notice, the daily relative strength is divergent. So we hit a new high in price, not a new high in relative strength. So it's divergent relative strength, right? And if this is a down day today, which it looks like it's going to be, but I mean, it's early and it's crude. So you can't like, hang your hat on it. It's going to be a down day today. But if it is, that's going to be that's going to be an evening star reversal. Candlestick pattern. And then you break through the channel support. And as Steve, as you were just talking, that would probably lead us to a move down to 30 into the 30s, low 30s, maybe even 28, 29. This breakout point, it's quite possible.
Yeah.
So, what's
RSI?
It's a real simple indicator. Just kidding. It's a relative strength indicator, but I know you like to call it the real simple indicator, but it is one of those.
Implicator. It's not even a word. It implies things. Yeah.
Implicator. Okay. It's an implicator, but it is a nice setup. Now, if you guys are, if you use ForexAnalytix, that there was an active pattern in play put on by me yesterday at the end of the day yesterday. Because that's what I'm looking for. I am looking for a reversal here. And you didn't even have to be a ForexAnalytix subscriber to get that pattern in play. You know what I mean? Yeah. You could have actually just read the blog, which is free.
Very generous.
And well, I mean, it's just, there's certain setups that come up and I'm like, man, it just depends. Depends how I'm feeling and what I'm feeling at that time. But you also talked about gold and silver. Now, silver is at its lows of the day and gold is up. And you pointed out gold was up $10. It's only up $5 now. Gold's actually dropping quite aggressively at this moment. But gold's one of those things that it's on my radar as well. Sorry, I just had to yawn. But let me show you something. This is a daily chart. This is the last big move we saw down in gold. Now, this was pandemic time, post-pandemic, I guess, post-shutdown. We went from this high at 1710, dropped down to 1451, and then ripped back up to the 127% extension today of that move. And let me just delete that really quick. Okay. Now, as we hit new highs in price, your RSI is still divergent, right?
Yeah.
Okay. So will we stop here? Maybe. But more importantly is what you were pointing out, Coach, is silver is actually up against resistance, up against this triangle, right? Pretty key resistance that it hasn't been able to break the last couple of days, the last 3 days actually. So what I'm actually watching for in gold is if gold actually drops below the 1762, 63, which is another 10 points from where we're at right now. That's going to end up being a false breakout if we can break back below that. So I'll be looking for gold to show us a false breakout, and if so, I'm actually considering being on the short side just near term. As you guys know, I'm actually
1767.
Huh?
What's the prior high was 1767, so under there would make it a false breakout.
Yeah,
right?
yeah, exactly. This is the breakout point
Okay.
right here, 1764.
Okay.
So a break back below that would be a false breakout. But as you guys know, I'm actually a gold bull, and I made the argument last week. We spent 20 minutes on this webinar, maybe about 6 days ago, saying you don't want to be short gold, and I still really don't want to be short gold like longer term. But if we get a false breakout, that technically would tell me that we're probably just going to still be in this range. But you can't be short gold right now. It's breaking out. You guys get that, right? It's like it's breaking out. But if and it's a big if too. If we come back and drop back below this little pink line here, then you have a false breakout, and then
that's
you can
your signal.
Yeah, that's my signal. And then if I was on the short side, which I might short some gold, all I would play it for is maybe $50 to the downside. I wouldn't be looking for, personally, not in this environment, I wouldn't be looking for like a move back to 1600. That's just not realistic in this environment. We're dealing with a pandemic, election cycle, unlimited liquidity pumped into the system by every central bank in the world. Every central bank is going to ZERP. Yeah, I don't want to be short gold like for a long period of time. I'd prefer to just try to scalp it for $20-$30 on the downside and then get out and stand aside. Take this technical setup with a oh yeah, give us a false breakout, and then I'll play it for a little bit. But that's it. Nothing more than that. For those of you that are gold bears, that's in this environment. Good luck. You're probably gonna get this trade continue to be shoved up your rear end for the next few months. So, so anyway, that's how I feel about gold. It'd have to be a false break. Show me that it's a false breakout versus me make the assumption right now. You can't make the assumption yet. But silver is weak. I mean, look at silver. It's actually, it's weakening, and it's failing up here at the triangle resistance, which, that's, again, that could weigh on gold. But the gold silver ratio may continue to turn up. All right. So let's turn our attention to a few other things. Wow. What happened to the dollar yen? That just ripped out of nowhere. Wow. Look at that. Whew. Why? I have no idea. Actually, I thought it would, dollar yen was actually breaking down. Whoops, that's not what I wanted to do. Yesterday, and I wasn't paying much attention to it, and I just looked over at my screen and saw that it's screaming higher. Must just, I guess, probably like a lot of stop losses getting triggered right now. But man, what a run, huh? That's a hell of a squeeze. Now, you're not really seeing that in. Oh, I guess you're seeing a little squeeze in some of the other yen pairs. You got the euro yen spiking here, pound yen, Aussie yen, towards its highs of this session, I guess. New Zealand yen a little bit, Canadian yen a little bit as well. So, yeah, a little bit of squeeze in these yen pairs. Again, I'm not really sure why, other than stocks are recovering just a bit. Another thing that I was looking at is the Kiwi. So the Kiwi, following the RBNZ, got hit. And, we're probably at some decent support down here. But I'm going to show you a couple of charts that I think are very important today, which will be, a few New Zealand pairs. Look at the Aussie New Zealand. Broke out of this triangle. If you were, ForexAnalytix subscriber, you knew that this was setting up ahead of the RBNZ. But look at these other New Zealand pairs. Let's look at the pound New Zealand. So the pound New Zealand not only did it break this minor downtrend line that was here, it broke also this breakdown point, and we screamed through here. So now the pound New Zealand looks like we're going to make a move towards 196. This is going to be pretty big resistance now. And it was very divergent. You can see relative strength was divergent all through here. See this move lower here, all divergent, which, you know, is a basically signaling to us that we're going to see a reversal in some of the, in the pound New Zealand. Euro New Zealand is also approaching major 176.50 major breakdown points. So if the Euro New Zealand and the pound New Zealand really start to break higher, that's going to be a signal of risk aversion, which I think is significant. You know, you gotta be on the lookout for these reversals, and not only in the pound New Zealand and the Euro New Zealand, but some of these other New Zealand pairs, you know, like the New Zealand US dollar. So the New Zealand US dollar is under a little bit of pressure. Now, what else? What else do you think, when we were talking a little bit about crude, what else do you think can be moving if crude oil has shown a high here? Right? If crude is signaling that there's a high, what else could be moving? Well, in my opinion, it'd be the dollar Canadian. And look at the dollar Canadian, really big. This is a really big development. There's a lot of us in the chat room yesterday. They were playing the US dollar Canadian off the 200-day moving average. It was a false breakdown yesterday, hit the 200-day moving average. I played the dollar Canadian multiple times on the long side. Amanda in our chat room, Kim in our chat room, were picking up the dollar Canadian. I think Kim's still long. And I think she picked it up at like 135 and was long overnight last I heard. But look at the development here in the dollar Canadian. So if the dollar Canadian, if crude is actually rolling over, this dollar Canadian is on the cusp of breaking out. And if we break out above this trend line here, above 136, the next stop is going to be 137, and above 137 would be a major break of this down channel. So if crude oil continues to weaken, look for the dollar Canadian to continue to show it's going to continue to show strength here if crude continues to roll over. So I would be watching the dollar Canadian. It's also signaling that we might see some risk aversion as well. So that is another currency pair that should be on everybody's radar. If you're not long already, I'm going to continue to buy dips today. So, all right. I think I covered enough. I don't want to take away from all of what Steve and Stelios are going to talk about, because, you know I talked about gold and silver and crude, which is really treading on their territory. But how you doing this morning, guys? Good morning.
Good morning.
Morning.
All good.
How you guys doing?
How you doing? I'm good. Doing good. How you doing?
I'm awake. I'm awake. And I'm drinking coffee. So what's the word this morning? It looks like we've got futures that are down a little bit today.
Yeah. It's a bear trap. They'll give them like 0.5% so they can squeeze them like 2% once they get some news that mosquitoes will be biting less this summer or something like that. You know what I mean?
Well, as far as equities go, one of the things that I think we should be observant of, if you're looking at the S&P, is we are making lower highs intraday. Right here is equivalent highs, but basically lower highs intraday, which you got to think about that.
But higher lows as well, which means that we are in general in a consolidation, and usually those break out in the direction of the trend.
Yeah, correct. We are in a consolidation. So as long as we stay probably above 3,000, there's no real reason to be bearish. But we are in a consolidation. We might be at the upper end of a consolidation too. So that's just something to think about. Which, over the next couple of days, You know, if we go from 3,100 to 3,000, that's a big move.
Yeah.
Well, not a huge move, but it is.
Probably a big enough move to get 1 more trillion of stimulus or something like that.
There you go. There you go. Well, ladies and gentlemen, I want to thank you all for being here today with me, but I am going to pass it over to my colleagues, Steve and Stelios. But before I do that, I need to mention, if you haven't, if you haven't used Forest Park FX yet for your services as far as finding a broker that you'd be happy to use, make sure you visit with them. And, you could get to them directly from our reimbursement program tab on ForexAnalytix. They are our webinar sponsors. So if you enjoy what you see and hear here every day, at least give them a whirl, give them a call. You can contact them live here on Skype or email and just see if they can find a broker that might be better suited to your needs. It might give you a cashback rebate, or maybe you can be part of the reimbursement program where you can be part of ForexAnalytix for free through your trading. So Steve, Stelios, I'm going to pass it over to you guys.
Thank you, Blake.
Have a wonderful day.
Good luck,
Thank you.
Blake.
All right, guys, have a great one, and good luck to you. I'll catch you soon.
Thank
Bye-bye,
you.
mate.
Hello,
see you.
guys. How is
The king-
everybody?
The king
Hey,
has
Phil.
left the building.
Elvis. Yeah. So, hello, everybody. It's been
Now it's
another
up to
one.
us roadies.
Yeah, we're the groupies.
Move that amp still.
So,
Go ahead, bro.
so it's been a bit of a deja vu in markets. We're seeing a little bit of a drop in equities, but chances are it's going to get bought up. We had the RBNZ, just like Blake mentioned, who, although they left rates and QE unchanged, they were dovish. Well, at least on the dovish side, they see risks on the downside. And they did say they're prepared to provide additional stimulus as necessary. So that was definitely not hawkish. And that's why, one of the reasons why the Kiwi is suffering a little bit today. Not a lot, but it is underperforming. And so, they go in line with pretty much every major central bank in terms of how much easy money they're bringing into the system. And this takes me back to equities. And, I talk with many friends about this, and they all say, what do you do? Do you buy? Do you sell? I said, look, if you've been buying the dip for the last 3 months, you've made a lot of money. It makes little sense in terms of macro to be long or to be buying up here, but, it's been profitable. We do have the central banks behind us, and they're going to push everything to all-time highs and beyond. That's for sure. So, I had a discussion with a friend of mine who said, I want to put some trades on and forget them for 10 years and, leave something for my kids. I said, no problem at all. Just buy indices and buy gold, buy precious metals and indices, or buy some land somewhere. So, the question is, do we get a pullback? And if we do, where does it go? I think we'll get new highs, maybe even new all-time highs in the S&P. If that happens, I think then the land will be clear for a leg lower. And of course, I could be wrong. I've been wrong many times in the past. I'm not short, but I'm not long either. So I'm just waiting for that in terms of equities. So what I'm saying is basically the same thing I've said for the past couple of weeks, or 3 weeks, or 4 weeks. So it's the same. And I still have no position, and I am just observing. We had some data today out of Germany, IFO, business climate, current assessment, and expectations. Funnily enough, current assessments was worse than expected, and expectations was better than expected. So everybody's like, things are bad now, but they're going to get a lot better soon. I hope they're right. And what else did I want to say? Oh, yeah. Also, there were a few people who were talking yesterday after we saw those PMIs in Europe and the UK, reaching the 50 mark. And people were saying, oh, look, we're back to where we were. Perfect. No, it was a V-shaped recovery. I told you so and all that.
Yeah, probably they are completely unaware of how the reading works.
You have to understand how the reading works. If you're at 50, it means you're not going up or down. If you've gone down a bunch, then at 50 it means you're not going any lower. So just learn how to read the data, and then you can understand it. But anyway, at least we're seeing some signs of stabilization in terms of data. On the other hand, there are more cases reported. I'm reading the stuff out of the US and Brazil, and it is very scary. So for me, there are so many things that could go wrong yet, and it makes me very hesitant to be risk on, that's for sure. Having said that, I do have the positions I still own are still long silver and Norway, the kroner. So those are risk on. I have been taking profits. I have been taking positions off, the quarter here, quarter there. I'm still running a little bit of both, and I'll be looking to probably take them both all out and reload lower. So that's my view, and it's been going well. We've been lucky enough, and just taking it easy. Position sizing for me is much smaller than it used to be, and
nice hold still.
Thank you.
It's easy to make a good call. It's tougher to make a good trade, and the toughest is a good hold.
It is tough, and it's very frustrating sometimes. But
you need conviction.
Sometimes you win, sometimes you lose. So what else to say? Didn't really have that much. Do we have any data today? No, we don't. So
no, we don't have, at least not now. We have data in 2 hours from now.
Oh, we have some
crude oil inventories. Yeah.
And Bullard is, I think, speaking late today, but
I'm wondering what he's going to say.
Yeah. Oh, the other interesting thing was Trump and his administration are now considering new tariffs on exports from European countries and the UK, like Germany and France, and I can't remember some other countries. And I can't actually remember what type of exports they were, but I remember it was something like $3 billion worth. So it's not a huge amount, but it's just another move, which is not really friendly, let's put it that way. But hey, he likes tariffs, and he's just going to keep putting more and more.
Wine.
Well, maybe
Sunil says wine.
Thank you, Sunil. Thank you. Yeah.
Okay, so possibly he heard the news that the EU was not going to let countries that had failures in dealing with the pandemic, namely Russia, Brazil, and the US, as persona non grata in Europe.
Yeah.
That they're not going to be allowed. That's a big thing. Americans can't go somewhere.
Yeah.
So anyway.
Steve, can you have a look at silver? Something's happening. It's
here it is.
Yeah, you're seeing.
Yeah, it's a usual,
fat finger. Is it the fat finger?
Yeah, it's a usual intraday dump, which you see quite a lot of those. You never, coincidentally, you never see the opposite. You
know what? Every time this happens, I just go back to my time when I was a market maker, and I remember when I had to deal, big trades, like something, 10, 20 billion, whatever, big size.
You pushed everything in the market at the same time, right?
You try to tiptoe and make sure nobody even gets a whiff of what you're trying to do, because you know how these things work. Even people sitting next to you might give away something that's happening to others. So you do the best you can to go very slowly and just try not to arise any
with precious metals.
And look at that! It's like wham, 12 12 levels below. Let's take them all out. It just makes no sense. But anyway, it is what it is.
I knew guys on the floor. I knew guys on the floor that would do their buying, and they had big reps, right? So they do their buying upstairs in the office, and then, quietly, and then they walk into the pit and do a lot of just a little bit of buying, and the whole pit would come in trying to get long, and then he'd liquidate his longs that he put on in the office.
Yeah, that can work. Yeah. Although you don't have a pit anymore, right? So then it's different.
Those games are gone.
Yeah.
Now they spoof. I don't know what that means.
No pit anymore. Only swamp.
They're only bowling alleys now.
Only Brad Pitt.
Brad Pips.
Yeah.
It's going to be my guest next Friday.
Okay.
Nice.
All right.
Other than that, I have nothing else to say, really.
All right, I'll shut up.
No, please don't. Tomorrow is going to be a big day. We have some interesting data, another revision of US GDP.
Same type of
jobless
move with
claims.
platinum, by the way, Stelio. Somebody mentioned it.
Okay. Yeah.
Same
makes
type
sense.
from 830 to 800, like in zero time.
Interestingly, gold didn't move that much. Gold moved like $1 or $2. So that's
Yeah.
very interesting. Anyway, it is what it is. It is what it is.
It's not so easy to push down gold nowadays because there are a lot of individuals and institutions buying it. And just by having a look at repatriations, during the past couple of years tells you all you need to know. I mean, tons and hundreds and hundreds of tons are moving around vaults because for some reason countries decided that it's a good time to repatriate gold. Now you go figure why.
Yeah, imagine the amount of the expense to actually do that.
Yeah.
Insurance, everything, the admin. It's not a cheap thing. So imagine the benefit they think they will have, or maybe not the benefit, the cost they're going to have if they don't actually hold it themselves. That tells you a lot about physical versus financial gold.
Indeed, it does. Speaking of which, despite the move that we've seen now lower in platinum and silver, both of them, they have the exact same type of formation. Both of them did get rejected from this channel's trend line resistance, but both of them remain within the channel. So, despite the sharp move lower, from a technical perspective, there's no real damage done, at least, not at the moment, not yet. So that's worth noting.
Yep. Okay.
That's it, Stel.
That's it from me, I'm afraid.
Okay. Yeah, it's been, other than some moves like the ones we just talked about, it's been rather a quiet day. Even stock indices have now spent, in essence, the whole week. Here's the S&P, for example. They've spent the whole week, right, consolidating in, a very tight range. And, since we've said it many, many times, since the whole market is now fixated on, because that's where the money moves, what happens with stock indices and affects, just follows closely what's happening there. With the stock market being range bound in a rather tight range, there is not much movement happening. Now, having said that, I think that the path of least resistance, as long as this is just a consolidation, remains higher. So, I think that there is a higher probability that we're going to see another squeeze to the upside. Probably even, that would mess the market even more if we saw a higher high above this previous 32, 33 high that we had last week. Not last week, actually. It was like, what was it, like 2 weeks ago. And, if that's the case, then we should still see follow through in the Aussie. Here's the Aussie, broke out from the triangle, back testing. So I think that's probably a nice entry area here. Risk reward is, extremely favorable. I mean, you buy it like at 69 cents. Worst case scenario, you can have a 100 pip stop loss, and a move towards 71 cents is a very, very decent probability scenario. And here's the Kiwi doing the exact same thing, meaning backtesting the breakout. Of course, nobody can guarantee that this is a totally different type of formation, but so far this looks like a solid interpretation. I guess we'll find out very soon. I wouldn't be surprised even if we see a move higher, within the day. Now, absent of that, I don't think anything is going to really be moving. I mean, with the exception of, we had the two metals just crashing for no apparent reason whatsoever, which, as we've said before, with metals, with precious metals especially, that unfortunately is not a rare case scenario. It's not really easily explainable. I mean, you would only sell so much of it that you would actually take out so many levels if you actually wanted to just make them crash. Otherwise, it makes no sense, because if you have to sell these type of quantities, you would do it slowly because you would simply get a better price. So this type of price action is not really, normal under any kind of circumstances, but, it is what it is. We've been observing it for years, and, you have to be cognizant of that, and, keep that in mind, that, whenever you're long, there is always the possibility that you're going to see some type of a flash crash, or whenever you're short, you might get lucky and, benefit from one of those. Having said that, we've said it multiple times, precious metals under this current environment will keep doing well. It is inevitable. I mean, no matter how much the market wants to, ignore many of the fundamentals, this is, such a strong force that it's not going to be easy to bypass or ignore, simply because there are a lot of institutions and people that are actually trying to get some exposure that they lacked in, in being long these metals. Now, we spoke yesterday about the USD CAD, and since we haven't had much of a move in, the most liquid and, the most popular of the currencies, we can, have a look at some more today. So we spoke yesterday about USD CAD. Here it is. So we spoke yesterday about the USD CAD when we were actually testing these lows, and they said that, USD CAD looks, still much better to me than the Aussie USD or the Kiwi, if we're talking about you wanting to have some long exposure in dollars, right? So I'm making myself clear. So we did find support there, and we're back again testing this triangle. So, keep in mind that a breakout from there should produce, let's calculate this, should produce another leg higher, which, if we get equality of legs, that points to a move towards 138.50. Of course, lower than that, we will have to test this, very nice descending channel trend line resistance, which currently passes from 137.50. So, 137.50, above that, I think we're going to be gunning for equality of legs. Clearly, if we see risk on persisting, it's not going to be easy for USD to do that, but keep in mind that probably that's one of the best FX trades if that's not the case, if risk doesn't pick up and it either remains range bound or, even better, goes off. Dollar is going to catch a bid, and in that case, I think that USD looks quite nice. An even probably better example of a currency pair that's going to move with risk off is USD-MXN, which has spent now some time consolidating here. So I think we can see the exact same thing happening there. At least one more extension higher. Let's see, which will be targeting somewhere in the vicinity of like 23.75. We have USD SEK and USD NOK, which I wanted to show yesterday. Actually, let's go on the daily chart first. So here is USD SEK on, here it is. Here's USD SEK on the daily chart. So keep in mind, I've been monitoring this descending channel. We've had one leg higher, got rejected from this channel trend line resistance. If we do get another leg higher, I think we can actually break through this, and that's going to be a bullish development. We have USD NOK. Here it is. It has broken above this, little descending channel and probably producing some type of a consolidation like this. So another leg higher from there before lower, something like this, looks like a, viable extension, and quite a likely one. I mean, this consolidation should produce one more leg to the upside. Blake, I wanted to talk about pound Aussie and pound Kiwi because both of them look good, but Blake already covered them. So I'm going to talk about Euro Aussie and Euro Kiwi. So we talked about them yesterday. Look at them. Euro Aussie testing, again and again, this trend line resistance. So keep in mind, from a risk reward perspective, as long as this resistance is holding, shorts look very appealing, especially given the fact that risk looks likely that it's going to pop higher. Okay, if that happens, you should expect that one more leg should take place from here. As I said, risk reward is definitely favorable, but keep in mind that if for some reason we turn lower in risk from here, I don't know, some type of a tape bomb or whatever else, we'll probably be breaking this channel, and breaking through this channel is quite a nice bullish breakout after a long period of time. Euro Kiwi not exactly on top of equivalent resistance, but on the other hand, it's not that far away either. I mean, we are currently trading at 175.30, resistance is, let's say, at 176.50. I mean, 120 pips for pairs like the pound Aussie and the pound Kiwi are easily doable in an hour or so. Keep in mind, these pairs actually tend to move a lot more than, Euro USD, pound USD, Aussie USD, NZD USD. So, getting 120 pips of upside here, or even getting 300 pips of upside within the same day in pound Kiwi is something that we've seen multiple times. Just a recent example. I mean, take this day here that we had. Just look at how many pips that was, right? I mean, it was like above 1,000 and again above 1,000 there, and the previous one was a few hundred. So, you have to keep that in mind. So, not being exactly on resistance doesn't mean that on the same day we can't get ourselves on resistance and punch through it like it was never there. So, both of them are going to do very well under a risk-off environment. Of course, we need confirmation for something like that. Blake already mentioned. Okay, it's one thing saying that it's likely that we're going to continue higher. The question is, okay, when do you actually invalidate that view? One area to watch is this little channel support is roughly at 3,060. But in my opinion, more importantly, it's a daily close below 29.72. Daily close below 29.72, I think, will open up quite a lot more downside. Until that happens, you have to be very skeptical because we know that the market, is illogically high. But that is no guarantee that it will start, acting logically suddenly. Now, USD yen, we were looking at it yesterday. I still consider it abysmal, and this is one more example why I consider it abysmal, because yesterday it was, when we were here on the webinar, it was testing and actually attempting to break out from this, triangle. So logic said that, that should produce some type of follow through at least towards the 61.8 at 105.20. But as I've said many times, logic and USD yen have very little to do with each other, and that's why I've completely stopped trading it. And thankfully, I did it, quite early on, so I really haven't got any, got hurt at all from it. I bet, there are tons and tons of people that have got hurt from it, because as you see, yesterday we retraced, plenty of its, intraday losses. And today we seem to be catching a bit. Of course, still an inside day if you look at the daily. But if you ask me, as long as this is the situation here with USD yen, just stay away from it. Now, Another thing I wanted us to look at, because we haven't done that this week, at least I haven't done it within this week, is the bond market. So treasuries, a lot of people got fooled that they were actually breaking down a couple of weeks ago, when in essence they were just expanding their consolidation range. So that was not the triangle we should be looking at. It was actually an internal triangle. That was a triangle we should be looking at. And now we're again consolidating in a very tight range near this key resistance area. So I still think that eventually, no matter what happens within this triangle, eventually we're going to see, most likely than not, another push to the upside when we see the next risk-off leg, see record low yields. Here's the 10-year yield with the equivalent triangle you see here. So I do think that when we see that push higher in the bonds, I wouldn't be surprised even to see the 10-year yields temporarily approach or even make it to zero. Not very easy, but under current circumstances, not unlikely at all. Before we can see, perhaps a much larger recovery in the form of a corrective move. Okay. Now, 30-year bonds and yields and 20-year, look very similar to each other. So there's no real big reason to go through them one by one. But it is really worth having a look at the bonds, because the bonds are still consolidating in this large channel. Within that channel, we have this internal channel, and as you see, we've been banging our heads here on resistance for, what is it now, 2, 4, 6, 8, like a couple of trading weeks, and we don't seem to be able to break through it. So quite an interesting trend line here. From a risk reward perspective, shorts look more appealing, because you can risk very, very little and look for a pullback. But even if we break higher, keep in mind that this larger channel is still in play, with the channel's trend line resistance currently passing from like below 178.50. So that's what you should be looking for. Let me go through some of the questions. Could you look at the cable? Yep, absolutely. What do you think about VIX? Yeah, now having to do with the VIX, that's a good question actually. So the VIX, as we expected, popped higher, several days ago. My target was this range that you see here, this little resistance area. We almost made it there. We actually came, quite close to it. I mean, that range is roughly at 46. We made it to 44. Now we are back testing another support resistance area, this time as support. I would favor another leg to the upside. So if we, there we go. So if we refresh the drawings on the chart, I would say that I would favor something like that. One more leg to the upside, another higher high before we see, at the very least, before we see the VIX market, getting calmer once again. So in general, my thesis that I've had for many, many weeks remains the same. I do expect that sooner rather than later, we're going to see another leg higher in the VIX and another leg lower in the indices. Now, in the very short term, we might first see, a higher high in the S&P before that happens. But as I've said many times, I don't think there is any viable risk-reward ratio for you to be long at current levels, because, yeah, you can definitely make some money by keep seeing indices crawling higher. But on the other hand, you can easily get, a 10% move lower within a matter of 3 days or whatever. I mean, we've already seen the clouds thickening, having to see with several factors. We're starting to get more tensions in, US-China, COVID cases, are starting to get exponentially higher once again, and the market should start caring about it at some point when it's going to start, being obvious that even if the economy doesn't go in lockdown again, which I don't believe it will, still, having, a big expansion in active cases of COVID will be enough to do damage to the economy, simply because people are going to start being a lot more careful once again. So they're going to be self-isolating or self-restricting in a big extent. And, especially if we're talking about the US economy, which is like, at a huge level consumption-based, that immediately means, a huge impact to economic activity, right? So, a lot of things are currently happening. One more, polls are still coming out. So a clear lead of Biden over Trump. And I remind you, this has nothing to do with the political position, just by taking what Democrats have been saying, having to do with taxes on corporations, individuals, etc. There is no question about it. If the market starts pricing in the possibility of Trump not getting re-elected, the market will have to suffer, because one of the biggest correlations with what's happening with stocks is corporate earnings, and higher taxation means lower earnings, which necessarily means some type of adjustment lower in the price of stocks and indices. So the market has all of that to price in. And we've seen many times that when the market is refusing to price in negative stuff, very frequently there comes one day that it's forced to price them in, very quickly. And that's why usually you see that the moves to the downside are much more brutal than the drift higher. So considering all that, and valuations that are like at all-time highs, given the fact that earnings have been, tanking lower, it's a very dangerous proposition being long indices. You need to be very careful. Make sure you have tight stops. Make sure to take profits on the way if you want to play that game. Otherwise, you can find yourself from being, decently in the money to being quite a lot out of the money before you, you can blink twice. We had a question about the cable. Here's the cable. So the cable actually broke higher yesterday, retesting this breakout trend line, question mark, retesting, we'll find out. From a risk reward perspective, I guess that, being long here makes sense, right? So, I mean, we'll find out, what's happening here within, the next couple of days. Keep in mind, as we've said since the beginning of the week, there's going to be perhaps low volatility and a lot of window dressing happening during the next few days. Don't forget that we're just, what is it now, like 4 or 5 trading days away from the end of quarter and end of half year. And, that usually, affects trading conditions. So, you have to be cognizant of that as well. Do you think the Nasdaq is heading further up still? Thank you. Listen, the Nasdaq is, still overperforming, but don't forget, I mentioned that, several weeks ago. Here is the Nasdaq. Nope, that's not what I wanted to do. So here's the Nasdaq. And here's the ratio of the Nasdaq to the S&P. Now, this blue line that you see up there, let's change its color actually.
Oh, we did get a third drive.
Yeah, this orange line that you see up there is the all-time high. When did we get that all-time high in the ratio of Nasdaq to the S&P? At the very bursting of the Nasdaq bubble. Calling the Nasdaq in 2000 a bubble is not my invention. it is absolutely accepted by every single market participant. So, everybody accepts, looking backwards, that that was one of the bubbles of, financial markets history, right? So the Nasdaq during its bubble time, it had reached this, 3.29. So the ratio of 3.29 times the S&P. And guess what? We're currently at 3.27, while we seem to be trading within what looks eerily like an ascending wedge. Last time we looked at this, we were there. We talked about either the possibility of a third drive, as Dale mentioned, or a breakdown from there. So let's redraw all that. Yeah. So let's redraw all that. Now we're looking at the possibility of an overthrow, which is extremely frequent in wedges, and the reversal lower. So I would be very, very, very careful here. I'm closely looking at this ratio a couple of times per week, actually. And I think that a reversal in this ratio can at the same time give us a reversal in, risk mood, at the same time. Keep in mind that due to the specific circumstances of the sell-off we got in February, the vast majority of the bubble stocks did well instead of suffering, because they were well positioned to suffer less in a COVID environment, in a lockdown environment. But at some point, these stocks will have to start coming down and more in contact with reality. So
Thank you,
that will
buddy.
inevitably happen.
Yeah.
Is your guest here, Dale?
Yes, Dan is here.
Perfect. Enjoy the interview.
Thank you, buddy. Nice analysis. Really cool formation up there. Okay, Dan, going to get you set up here. What a great day to have you. Okay, Dan, welcome back to FACE.
Good morning, Dale. How are you?
How are you, my sound money guru? How are you today?
Busy, very busy. In the last few days, it's been very, very busy.
So I don't recall, you usually don't share your screen, right? We just talk and
yes, I can. Which one now? Okay.
All right. So it's a green box. Drop-down menu says share screen.
Okay.
And then you click it, and you'll have your choice of screens to show.
Okay, so let's go with this one. Okay, can you see my chart?
Got it. So you're showing a 1 minute tick chart for a long-term telescopic sound money investor. I find it unusual. What are you looking at here?
Well, this is an intraday chart of gold. What's happening this morning? So you see here that it was sideways in Asia, even if it started going up in the morning. It went sideways, and then it broke up when European trading started. It went up to close to 1780. It did not cross it, and as it happens very often, just before or after U.S. market opens, it usually gets hit and pushed back. But this is an intraday, so it's only from 1778 to 1766, 67, if you want.
Right.
So it's a very small attack, if you want, takedown. But it happens regularly in when the U.S. trading starts. You have that into gold.
Okay, you could call that a small takedown. Would you consider what's happening in silver today with gold still, hanging in there, a body slam?
Let's put the silver one, here it is, and then you can see it's a much bigger one.
Right.
What you have to understand, and I think I've mentioned it several times, and I say it regularly. I'm being asked about silver. Why doesn't silver do the same thing as gold? First of all, silver has a very good correlation in a monetary crisis with gold, but it's not a perfect correlation. It lags behind. It lags behind gold. So silver waits for gold to give the signal before it moves. And when gold goes down a little bit, silver goes on steroids even lower. When gold goes up, silver waits a little bit, and then when he sees a clear signal from gold, it goes up on steroids.
Well, recent market history, Dan, has shown that in action live, because the gold-silver ratio came down from 125 to under 100, and that's when silver was outperforming. But that 95 level is what's turning it back up, and to me it looks like your theory about gold holding up much better than silver is going to come into play here. Could it be because perhaps there's going to be some risk off after these huge recoveries we've had in world bourses, and silver is going to be much more vulnerable to pressure if we get some type of pressure in equity markets?
Yeah, silver is a very, I wouldn't say weird, but you have to study it and understand it to see the relation. A lot of analysts get confused about the price patterns of silver. From a fundamental point of view, silver is much more an industrial metal today than it is a monetary metal. But that's what the confusing thing, that when there is a monetary crisis, like we've been since 2008, silver increases its correlation to gold from somewhere 50 to about very close to above 90. Even at the top of the crisis, it's going to be 100% correlation with gold. So what it means is that, and what confuses analysts, fundamental analysts, that they look at the fundamental data and they say silver should be going down because silver is an industrial metal. But it isn't. In a crisis, it becomes the poor man's gold, and it starts to correlate and to copy the moves of gold. And this is the situations we are getting into it now. We are already, and we have seen the correlation of silver to gold increase very high, above 80%. And that's what usually, so don't look at silver as being industrial in this environment at this moment. It waits for gold. Gold is money. Gold is the hard money, the alternative to all the currencies. And when silver sees gold moving up, it's poor man's gold, and it starts to move with gold. And that's what we're seeing. When gold starts to go down, silver says, well, I'm an industrial metal, and the economy at this moment doesn't go very well, so I'm going to go down with the industrial metals. But you have to be very careful, because the more the monetary crisis intensifies, the more silver joins gold, and it joins after a certain moment, it goes on steroids. It goes faster than gold.
Right, Dan. Let's switch gears a little bit to what could be around the corner geo-wise in precious metals. There's, in my view, a Cold War with China going on between the U.S. and in this COVID environment. I've heard some talk that there could be an intentional move by the U.S. government to revalue the dollar higher to use as a tool against the Chinese. What do you think of that narrative?
Yeah, I think that the situation is impossible for the U.S. government to revalue the U.S. dollar upwards, it will revalue the dollar to the downside.
Okay.
In the recent months, I've been one of the rare who's been saying that the move of the U.S. dollar is people are looking at the day trading, the short-term moves of the U.S. dollar index, and I think that that's a very big mistake. I'm gonna put you a chart here so we can see it much better. I put that chart regularly. So what you're seeing here now on the screen, you see the price of gold versus the US dollar index. Now it shows here that there is recently, actually in the last few days, it has been going down. But those who are looking at 6 months, that means since January, if they look at the chart, you know, you can see here that the US dollar has not done much. I'm going to put the 20 years chart.
Okay.
That's from the beginning of the bull market in gold in 2000. Now look at this chart over here. What they call a bull market, from a pure technical perspective, you had a triangle formation that ended up with a move up, a break up to the upside for the US dollar, that made dollar bulls very enthusiastic, and American exceptionalists, they went crazy and they said, you know, this is a century dollar supremacy coming back. But look at what happened. It did a flag over here from a technical perspective. Now, a flag is a formation that indicates a continuation, a pause, and then a continuation, which predicted that from the breakout from this triangle terminal formation, bottoming formation, it indicated a move that should go to about 120, 130 in the DXY in the US dollar index. But look what happened. It broke up in a perfect technical formation breakout, but it failed. That breakout failed, returned down within the flag, and then broke down to the downside. So reversing that flag formation, indicating that that was a false signal to the upside. But what happened is that after giving that false signal of going to the downside, it reversed and started going up, giving a boost to the bull dollar traders that were still back into that going up to 120 for the US dollar index. But look what happened. It didn't go anywhere. So for 5 years, if you take the average, the US dollar has done absolutely nothing. Okay, it's been flat. With this false signals to the upside, to the downside, you have here in the short term, if you can see it, let's put a 6 month again.
What if we took out 103 in the dollar? Would that change your mind?
Look at here. It went up and then it went down. What I want to make a mention here is that when you are dealing with currencies, you are dealing with government intervention on a daily basis.
Yes.
Those who look at the Chinese yuan and say, well, the Chinese manipulate their currency, the Europeans manipulate their currency, they forget that the US government has been the biggest currency manipulator in the last 50 years at least, but they started in the 60s with the London gold pool and manipulating the price of the dollar. So those technical patterns seem to break down when there is major government intervention in the market. Yeah, I mentioned to you in the last webinar that technical analysis is a methodology that works in a market, in a pure market. If the market is distorted, if the buyers and sellers are being distorted by manipulators at a large scale, like the government, the referee in the game, then technical analysis starts to give you false signals. And that's what has been happening since 2005, when the Fed started intervening in the markets in an excessive way. The technical indicators are starting to give on a regular basis false signals, because the Treasury, the Fed, when they see technical signals that you see and I see, they intervene and they cut it down, bring the market into the direction that the government wants it to go. So you see that in the US dollar index. But in general, I'll put you a long-term chart of the dollar and gold. Now, this is since the collapse of the dollar gold exchange system that collapsed in 1971. So look at that. From 1971, it went down. Then Volcker came and gave good feelings in 1980.
Yeah, he took the rate. He didn't give good feelings. He gave us a shock in interest rates. Dan, I'd like to move towards the current. We're kind of familiar with the history of gold. What's on your radar right now that may be dollar, gold, market moving, geo events, or government events? How are you looking at the U.S. election? That's going to be contentious. Possibly, there's not going to be a graceful transfer of power. What do you think is going to happen?
Well, the election it's certainly going to affect the market, the stock market, because the stock market has been identified with Donald Trump excessively, and Donald Trump looks at the stock market as his scorecard. So, and the Fed is manipulating the stock market with intervention in the market extensively. What happens, so that will have an impact on the price, on the stock market, the Dow Jones and the S&P 500, and it's going to have an effect also on the dollar and the price of gold. But those are, in a way, if you want, short-term moves. As of now, you have the price of gold has been in all-time high territory in all the currencies. I put this morning, I put it every day, charts of the SDR, which is a basket of the most important trade-weighted currencies, and also on the currency index. And gold has broken to the upside on all-time high in all the currencies. Recently, it crossed an all-time high in the Swiss franc, which is very important because Swiss franc is, for me, the cleanest dirty shirt, not the US dollar like many believe. The cleanest dirty shirt of currencies, of fiat currencies, is the Swiss franc. And recently, gold has crossed in all-time high territory in Swiss francs. There are two currencies in which the dollar has not crossed in all high territory, is the Japanese yen, but it is very close to doing it. And as you can see here on this chart, in US dollars is getting very close. It's around $150 from the high. It's gonna take it out, quite sure. Now I've become more certain that it's gonna do it somewhere during the summer, because as you ask me, what do you think about the politics? It looks that in the last 1.5, 2 months, coronavirus response by Trump has been a political disaster, a total disaster. And because of that, we are seeing more recently with his last event that he did, which was a total collapse, and we're seeing a resurgence of coronavirus in strong Republican states like Texas and Florida. and the recent polls and everything shows that the image of Donald Trump and the polls are showing that he's not doing very well at all. Now, my interpretation when it comes to the markets is that that is very bullish for gold, and it is bearish for the US dollar and the stock market. And we have seen the move, the recent move in gold, and I think that my probability is very high that gold will break out in US dollars above the all-time high in the next 2 months. By August, I would say you'll see gold taking out the all-time high, which is 1920, 21, something like that. So as the polls of Donald Trump degenerate, you will see gold outperforming even better than I expected. So if polls, the market see that that there is going to be a defeat, a major defeat of Donald Trump, and that the Republicans will lose the Senate and the House, in that case, long before November, first week of November, when it's the election, you will see the markets integrating that information and pushing gold above the all-time high of 1920, and even cross that psychological level of 2000, and do it before November election. If Donald Trump reverses that tendency, because you have to keep in mind that Biden is not a strong candidate either. Up to now, Biden has not performed in an exceptional manner. He just sat there and watched Trump collapse and do all kinds of mistakes. So he's not also a great candidate, so it could reverse. So what happens if all of a sudden we see in July and August a resurgence of Donald Trump in the polls? And in that case, you are going to see a slowdown. You'll see gold not taking out the all-time high of 1920, not cross the psychological level of 2000, and maybe go down a little bit, but not much. 1700, it's the lowest that I see going down. But I could see it on election night, and the next day, if Donald Trump wins, I see a gold taking a beating, and the stock market jumping up, but very short term, because the problems will continue and will degenerate into a currency war and crisis of historical proportions. And it doesn't matter if it's Biden or if it's Trump. So my interpretation is that if Donald Trump, if the polls, if the political information gives indication to the currency markets, to the Forex markets, that Donald Trump will lose and the Republicans will lose both the Senate and the House, in that case, you're going to see gold outperforming before the election already and hitting and jumping over 2000. If the market makes an interpretation that Donald Trump will pull it out and that he might win, in that case, the night of the election, like it happened 4 years ago, you'll see the stock market jumping, going up, and you're going to see the dollar going up, and you're going to see gold retracing. But as I said, this is going to be a very short glory, if you want, for the US dollar and for the stock market, because the issues and the problems with Trump is that he's going to take the war with China, but not only with China. Trump has started also a Cold War. I say freezing war because it's beyond cold, not only with China, but with the European Union. So it's the two powerhouses with the United States of the world economy that Trump has declared war simultaneously with the European Union and with China, and
Yeah.
his relations.
It's not good to have two front wars, is it?
Exactly. And besides that, his relation with India is on shaky ground because he insulted recently the Prime Minister of India, and you have seen that at this moment, in the last 2 weeks, you had a war between a border war between
Right. I was going to ask you
China
about
and
that.
India. That
Yeah.
should have pulled India into the arms of United States at the speed of light. But look what happened. Donald Trump offers help to Modi to negotiate with China, and Modi, rather than jumping in, refused it, turned Trump down, and decided to calm down, to water down the conflict, and to start negotiating with China. The opposite that it should have happened.
Yeah, I thought that he took that trip during the beginning of the pandemic. I thought maybe a proxy deal was struck, and that's why that border war started. And
Yeah,
maybe it was, and maybe he changed his mind.
Yeah. In any case,
Yeah,
it's evident that India has a problem with China, but does not want to join the United States. It doesn't trust the United States. Now you add to that, Dale, you add also another war that Trump is involved in. Even if he loves Putin, that's irrelevant. There is a freezing war with Russia at the same time. So United States has decided to declare war to three of the major economic, political, and military powers of the world at the same time. And I think that it is a very big mistake. And I think it collapsing the alliance between European Union, the North Atlantic Alliance, the historical with the United States, it was a major mistake.
Yeah.
He should have allied European Union. He should have seduced Putin, Russia, and isolate China. It's the opposite that happened. China managed to isolate the United States, and that is it is a very big mistake. Not to forget that Donald Trump, despite the image of being a capitalist, has become the most socialist president of the United States. Policies more state control, state interference in the economy than even Sanders would not have thought about so much intervention.
I knew you were going there, Dan. Yeah.
Yeah. It's a fact. I'm a capitalist.
Yeah.
I don't like it, but I'm not going to deny it. It's a fact of life that United States right now, not just United States, but Russia, China, they were already state capitalists. The European Union was kind of a socialist, neo-democrat, if you want, form. But United States has become today as socialist as Europe, as Russia, all the major five powers of the world, India, China, Russia, European Union, and United States, today are state capitalist, which is a modern form of saying national socialist. So they are all socialist in a way, and they are all fighting and controlling the economy in some form or another. You like it or you don't like it, this is reality. I don't like it because I prefer the American capitalist form, that it was not perfect, but it was a capitalist society. Europe, which was much closer to United States with some much more forms of socialist interference with state control companies. And you had on the other side completely state-controlled the the Soviet Union and China. Today, China and Russia are state capitalists. In other words, at the macro level, they are socialists in large corporations controlled by the state. But at the micro level, you have thousands and millions of small businesses in China and in Russia, which are purely capitalist, like in United States and in Europe. And United States and Europe in recent years, since 2008 crisis, government interference in the economy, in the stock market has been enormous. So they are not capitalist anymore. They are state capitalists, in other words, socialist in a form. With United States, because of Donald Trump, which is national socialist, because Donald Trump is very nationalist, while Europe, China, and Russia are what's called international socialists. They see more a global, global society, a global socialist, rather than Trump, who sees a very nationalist socialist. So this is why it's causing a problem in the currency world, and it seems evident that we'll come back to gold as a currency. I expected the Corona crisis to decrease or to stop the buying of gold by central banks. It hasn't happened, and the latest data shows that they are still buying, not as much as they were buying last year, but the year is not over.
Why? Because they don't have the resources to add to their reserves. Why would they stop buying or slow down buying gold during the COVID pandemic?
They are still buying it, in my view, Dale, because Donald Trump has done a very big mistake a year and a half ago, 2 years ago. He has weaponized the US dollar payment system. He has on a constant basis threatened countries to freeze their assets if they don't do what he likes. So he told not just Venezuela, he told Putin and the Russians, I'm gonna freeze, I'm gonna confiscate your assets. He told the Chinese recently, in the last 2 or 3 weeks, on a constant basis, the White House personnel, the State Department, the Treasury Department, have given hints that they will freeze the dollar assets of China, and that and they threatened Europe with the same freezing, which has made the world scared of holding the dollar. So in periods of crisis, Dale, when there was a major crisis, money was running into dollars. Dollars before 1971 was considered as good as gold. It wasn't gold, but because it was linked to gold, it was considered by the world as good as gold. So people were putting under the mattress gold and dollars at the same time. Since lately, it started changing after 1971 because dollar was delinked from gold. But Donald Trump in the last 2 years has weaponized the dollar with the Treasury Department's war and threatening countries to freeze their assets. So it scared the hell of employees in the central banks, and they are running away. They are selling their treasuries. The charts show clearly that central banks are selling US dollar treasuries since 2008. And what they are doing? Well, at the beginning, they didn't like the euro. The euro was in trouble. There was a risk of the split of the European Union. So they went all in gold. And recently, the euro started to improve its image. So the Russians started to diversify their foreign exchange reserves, international reserves, into some euro, because they also have a lot of trade despite sanctions with the European Union. So they are all the international reserves of Russia today are in large part gold, 21, 22% in gold. There is about 18, 20% in euros. And we don't have the data for China, but I expect that the Chinese are also switching out of U.S. Treasuries, and especially with the recent, in the last week or two, statements by Donald Trump and by people in the White House that they will freeze, they will take away. Now, Donald Trump and the White House says, I will take your money, and then the next 5 minutes says, no, I'm not going to do it. I like you. You know, if I did that to you, Dale, if I would tell you I'll steal your wife and children, I'll steal your money, and then I say, hey, I was just joking, wouldn't you be scared? Wouldn't you take precautions?
Yeah, I wouldn't ask you to move in. All right, Dan. So, Dan, you know, I tell you what, it's really, you know, what a mess. And
this is why you see that the demand for gold, despite the fact that that the crisis has hit economically everybody, that's the reason I see. That's my interpretation why gold central banks have not stopped. And there was a survey done by the World Gold Council recently that showed that central banks employees intend to buy gold despite the coronavirus and that's the reason the dollar, a big major mistake for which United States is going to pay a big price for a long time. The dollar used to be the safe haven currency where you run in a period of crisis, or we've seen right now that in this crisis, money has not run into the US dollar, money has run into gold. And that is a very bad signal. The dollar has become from a safe haven to a dangerous hell currency. In other words, I'm scared of the situation, but I'm not going to run in the dollar because Donald Trump just signaled to me that he's going to take my money away. So this is the problem that Donald Trump has created. If you look, and that's what my interpretation is, that look here on the chart that I have.
So even if he's defeated, it's going to take a long time to repair.
Exactly,
ever,
because
right?
Psychologically the world doesn't, and there is another problem, Dale. Once I found an alternative, when I was a student in Montreal, I worked after school for a friend of my father, a Jewish friend who had a store, a clothes store. And I remember he telling me, I cannot close the store because if I close the store, the client might go to my neighbor, find that he's as good as me, and I lose a client. This is the problem in the market. If people go to some other currency, let's say they go to the euro, or they try the Chinese yuan, and they see that it isn't as bad, they might not come back to the dollar when the dollar changes.
Needs to be supported. Yeah.
Exactly. So this is the problem when you are kicking a client out. He might not go back even or as easily. It's much better to hold on to him than to kick him out. And Donald Trump is pushing countries to find alternative. Recently, he has been threatening openly and loud China and the European Union. This morning, I was reading that he's putting tariffs on the European Union again.
Yeah.
So that makes the European Union scared. Now, the European Union doesn't hold US dollars. They have a swap agreement with the Fed. But swap agreements, they are not really transfers of dollars. There's been a lot of swaps in the last 6 months between the Fed and the European Union and other central banks. But look at my chart over here. For the last 5 years, there is no sign that money run into the dollar. If money run into the dollar, the index should have been 160 by now. Okay?
Yeah. Okay.
So you, Dale, you are old as I am, maybe younger than I am. I lived through since 1970 the whole movement. I've been in foreign exchange and the gold market, Now, the highest level of a bull market sentiment in the US dollar, I'd seen it in 2000. I was in Montreal at that time, and even me, I changed my billing policy, and I started asking clients to pay me in US dollars. The dollar was supposed to replace not only gold, but all the currencies of the world. In 2000, all the currencies wanted to peg, all those pegs that you see today, the majority were created in 2000 when the dollar was supposed to be mathematically perfect, and it was supposed to replace the gold. And
like the Hong Kong dollar peg and
exactly. That was the euphoria. I've never seen a euphoria as big in dollar as it was in 2000. The recent bull market that started in 2015, I call it a very anemic bull market. It's the worst anemic. Look at my chart. Look at those two and the third bull markets in the US dollar. The last one, if you call that a bull market, for God's sakes, you need glasses.
Well, maybe it's a baby, little baby.
Yeah, but
pig.
You see that each bull market of the US dollar is smaller and smaller and smaller. Okay, so this is you can't deny facts. I look at the data and I see it and I say, listen, show me where the money is running in the US dollar, because all I see is the dollar not moving anywhere and just sitting there for 5 years with small fluctuations on both sides, but mostly being dead asleep.
Yeah, I'm just looking, Dan, for one real huge short squeeze of dollar bears one more time. And then I believe the long-term scenario the dollar bears are talking about is going to happen in spades. And you know what I learned from this interview? It's good to have friends and allies, okay? And I'm glad to call you one. And thank you for edifying our community. I learned from you. You should see all the comments we're getting here about what a great interview. Dale, let him talk, because, I have a reputation for interrupting people. And I think I behaved pretty good during this one. Oh, I just sounded like our president. Okay. So anyway, Dan,
so
you and your family.
If you want, Dale, I'll show you just very fast for your...
how people could find you?
No, I'm going to show you Bitcoin.
Crypto. Okay.
Crypto. I know some of your followers follow crypto, so I did some classical technical analysis of a very short. I caution your listeners also that Bitcoin is very illiquid. It has a monopoly by a very small group who controls, and they can manipulate the market very easily. And they abuse technical traders by doing that on a constant basis. But if you look at the technicals, pure technical show, the recent bull market has been ended. Okay, you see this blue trend line has been broken. You have a triangle formation. Triangle formations in technical analysis are very bad signals because they can go bad both ways. They have 50-50 predictive value, but here you have a topping triangle formation and it broke. So you see here, this is manipulation. Somebody tried to pull it out to force people, day traders, momentum up, but it failed. So the same guys were forced to sell it themselves and it went back into the triangle. They tried it again, it failed. And here again, now it's going under the triangle. So on pure technicals and nothing else on a short term, that is a bearish image for Bitcoin. Okay.
Okay. Yeah, it looks like 7,000 coming. So what a great interview, Dan. You and your family. I hope that you remain safe and you keep up your work. It's good work. You tell people about what's happening. All those years of having lived through all these different changes in monetary policy and following the gold market. Really, you're a gem. Okay, you're a
Thank
gem
you.
for the community, and I want to thank you for spending 45 minutes with us today.
Thank you very much, Dale, and the same thing for you and your family and all the listeners. I wish you that despite all the difficult times, that everything is going to end up very well.
Thank you, Dan. All right, everyone, that's a wrap. Dan Popescu, and you could follow him on Twitter. And he has a nice little website, popescugold.com, WordPress, and his Twitter handle is @Popescu, POPESCUCO, company, @Popescu Co. And that's going to be a wrap for us today, everyone. Good luck the rest of the day. And we'll see everyone tomorrow. Adios. Thank you, Dan.
Okay, have a nice day.